All right, guys. This is the weekend review for Sunday, April 19th, 2026. This is gonna be my last call for the month, likely. I'm gonna be heading out. So I don't wanna I don't know what my internet situation is gonna be yet. So I'm just gonna go ahead and end it for the month. But going into the new month, I like to get our 12-week year started. So I want you to start thinking about that. So when we go over it again, I'm going to once we go over it again, we can start having an idea of what we want to kind of do to go towards that. So if you got any questions about that, if you weren't on the session when we did that, just let me know, shoot me a message, and then I can get that over to you guys so that you can have it. So let me turn on the pointer just as well. So what's going on? How was y'all week? How was everybody's week? I only took one trade this week. Um, just wasn't my setup this week. How'd you guys do?
Yeah, same happened with me also. Means Monday, Tuesday,
Yeah,
Wednesday, I didn't trade.
yeah,
I took one on Thursday and one on Friday.
yeah.
Mm.
Okay.
But Friday one, I scratched that immediately. I got to know something. Means
Yeah.
that was opposite direction. So immediately scratched that. In
Okay.
positive. That's it. Mm.
Hey, that's okay. That's
Yeah,
okay.
pretty much week was good. I
Yeah,
was
that's
trying to just stick with my rule. Like if I don't see my setup, then no necessity to jump in any
yeah.
trade.
Same thing. Same
Mm-hmm.
thing. That's good. That's good. Um, I guess we'll go ahead and get started then. So I wanted to go over the bar chart, COT report again. You notice the first thing is this was the last reported day, which is the 7th, April the 7th. We were at negative 17,000. And at this point, we're pretty much making somewhat of a higher low, not necessarily a higher low, but this is where we're getting our rejection from on this day. So you can see that from the 7th to the last reported date of the 14th, they went from negative 17,000 to 45,000 positive. So basically, what you're seeing is that the they took off orders here and now they're starting to add on here. So as the market was falling, they were taking off orders. And here you can see during this push up, they are taking on orders and they added a lot. And then opposite, these guys were putting on orders throughout this period. So they were shorting, putting on orders, and up here they are coming out of order. So they were short throughout this move down. Then as we make these lows, they flatten out their shorts because then they were starting to get taken out. And now they're having to close out their short. So these they went from what was it? Negative 45 to negative 115. So they're coming out of their shorts and trying to get back flat on their positions that they had short if they hadn't closed those out. And then they're also uh, probably starting to trade news with regards to what's going on with the Strait of Hormuz. And they're probably considering adding shorter positions right now as we get near a new record high. So we took out the all-time high that was made at 70.94 on ES, and we also took out the all-time high on NQ that was made above, I think it was 26, I think it was 26,880 area on NQ. We haven't quite done it on Dow Jones, but it's probably if we keep in this trend, it'll probably eventually take it out. So and then Fed Watch, no change. It actually went down, went higher on here. I think we were at 99.1. Now it's 99.5. So we are going to end up staying the same 3.5 on the Fed rate. The war updates, a ceasefire was called. However, they have stated that Iran broke the ceasefire. I haven't read it from both sides yet. Uh, One side, which is our side, U.S. and Israel, stated that there may be some issues with the ceasefire, and you can find that out here. But a lot of times there's some issues with what's true and what's not. So I haven't had a chance to look into it. I would suggest that you do it too, so that way you can see it for yourself. Another thing is, I would actually recommend you guys to open up a Truth Social account. It's Trump's platform, and not so much to use it, but I really just follow his account on here and maybe a couple other accounts. But I just follow his accounts because I need to pay more attention to what his tweets are, you know. I a lot of some of the times I've been using like the breaking news from CNBC or Al Jazeera, but sometimes you gotta get it from the horse's mouth, and he usually tells you whatever he's thinking on Truth Social. So, follow him on Twitter too. But this is where he's posting a lot of his stuff today. And this was his last post right here regarding the ceasefire. Basically, Iran decided to fire bullets yesterday in the Strait of Hormuz, a total violation of of our ceasefire agreement. Many of them were aimed at French ships and a freighter from the UK. Uh, that wasn't nice, was it? My representatives are going to Islamabad, Pakistan. They will be there tomorrow evening for negotiations. Iran recently announced that they are closing the strait. So that is the main thing. Iran has announced that they're closing the strait again, even though part of their temporary ceasefire um, was that they open it back up. But I'll have to read into what the circumstances were regarding them closing it down again. Something probably happened. Just say that. And then earnings. We got some key earnings this week. Some airlines I'm seeing. 3M, Capital One, some more banks. Um, just a couple health companies. Um, got Tesla. That's one we want to pay attention to. ServiceNow, IBM, Boeing. Another one we want to pay attention to. Um, got a lot of decent earnings. And so far, most of the companies are beating. And a lot of the companies, they lowered their guidance. So for them to beat is basically they're basically already defining their profit targets and revenue targets. And so we'll for the big companies, we'll just kind of want to keep an eye on what they are listing as their revenue and guidance and earnings goals. Then on Thursday, um, got a couple names: Lockheed, Amex, Huntington, American Airlines before the market, and then we close it out with pretty should be a calm Friday. So we got some middle of the week ones we need to worry about on Tuesday and Wednesday. Uh, Today, Sunday into Monday, the news that should kind of drive us this going into the beginning of the week is how we respond to the Strait of Hormuz being closed, because that's kind of going to be the thing, especially once you we look at the news calendar. There's not a lot this week. Monday, nothing's scheduled. So again, listen out for the breaking news stuff. Tuesday, core retail sales, and then we have the Fed chair testifying, the new one. Um, they're going to probably let's look and see what this is due to. Okay. Nothing too pertinent, but basically, they're going to be putting getting testi getting testimonies, statements from the new chair Warsh, which he's coming in soon. Um, and Fed Chair Powell will be out. And then we have at uh home pending home sales. And the previous was 1.8. The expectation, the forecast is zero point 0.0, and then we'll see how that plays out. So really 8:30 news on Tuesday and 10 news on Tuesday. Wednesday, not a lot of scheduled news. 10:30, we got the crude oil, so we definitely going to pay attention to that. And then Thursday, unemployment claims and PMI. 8:30 unemployment claims, PMI 945, and then Friday consumer sentiment. So not a lot to close out the week. Um, Again, pay attention to what you hear on breaking news. So like I said with this, open up your account with Truth Social. You'll get to hear from Trump immediately and sooner. So you don't have to go through the third party. Um, because that's kind of delayed at times, the third party being CNBC, BBC or Bloomberg or something like that. Those are kind of, we kind of get the second hand. They're probably as fast as we are if we were to just go on there and look at it ourselves. So that way you just get those notifications. As far as last week goes, um, last week we pretty much blew through all the targets that we had. It's unfortunate because a lot of the longer term projections I've been having and we've been getting, they beat. It's just been a bit of a challenge, a bit to kind of get into the trades because the market is just it's been moving really, really erratic. So we had this move to the downside on dollar. And you can see, let's start with dollar. So dollar, we were looking for this high to get taken out or these lows to get taken out. You can see on the chart that the lows got taken out. So we were looking at this high over here or these lows over here. And then we went ahead and saw the lows get taken out. And that's kind of opening us up where we're looking at right now. So we have we didn't quite take out these highs, but we're sitting around it right now. We did end up taking out the lows over here, so that's where we're at. There's a new week opening gap and a daily fair value gap. We bounced off the low. So if we're going to continue higher, this is a good area to bounce from. So right now it's looking like we've already taken out these highs over here. So I would like to see us make the 0 to 1 and see if we're gonna fail fail this high, or we're gonna keep go ahead and start a new move to the downside. If we don't, we bounce and hold at the 2 to make the 3 inside of this new week opening gap. It's overlapping from a couple of weeks, but we could possibly make our high on our number 3 high. And this is highest probability move to the downside in this range where we could have a 3-4 and that starts the new down move. If not, we hold at or around this low, um, new week opening gap low, and then we start looking at taking out these highs on the 4-5 move. If we sell off, and it's likely to happen at the 1 or the 3 high, since we're already pushing up. But if we do make our 0 to 1, there's a inverted fair value gap on the 1 hour, and then we'll be also trading back down towards the middle of the new week opening gap. I mean, or the fair value gap. So our 0 1 could likely just push us at this gap or near this low. and we could probably see a high probability bounce from here. So if we get to the one, I think that that 1-2 will be the highest probability that we get a move back to the upside. But if not, we fail somewhere inside of the high in the middle, and then we get our 2-3 move to likely take out this low from last week, or we continue to go lower and take out these other previous day lows on a 3-4 retracement to a 4-5 move. So does that make sense, everybody? Let me know.
Yep.
Okay.
Mhm.
Let me do something real quick. Where is my notes? Over here. Doo, doo, doo. Let me get this. Hang on 1 second. Forgot to post this. Okay. So what's today? The 19th, right?
Yeah. Yeah.
Okay. Let me do one thing. Sorry, guys. Give me 1 second.
Okay. Take your time.
Okay. So there's this. All right. Let me drop dollar. Where is the chat? Okay. Here's the chat. So this is dollar. Just drop dollar in the chat. Okay. All right. Now we are going to go to gold. Gold open up on a gap to the downside. And the original move I had started here, and we were going to have our 0-1. But at this point, 0-1 pushes down into this weekly opening gap. If we push down further, we trade near a daily fair value gap and the overlap of this new week opening gap. So we could see a bounce at one when we do our our 1-2 bounce. So that could be where we get our bounce from. If not, we fail inside and we our two takes out the monthly and the first leg down on the 0-1 move, and we are inside of the daily fair value gap near the middle or the low, where we could likely take out this previous week low, and that's where we get our three from. If we get our three here, that is a high probability area where we could also bounce from, especially if we get a low here near this daily fair value gap low, and then we get above the monthly. So that'll be a nice area to consider if we get at this area for a bounce to the upside. If not, we fail that with a 4-5 move to the downside, and then we can look to take out these lows and come into this fair value gap and even possibly taking out this previous week low. Since we gap to the downside, you can see the gap here. If we do push back up, we'll need to see price get back above the daily/weekly opening price. And then you'll probably want to see that we either trade inside of this volume imbalance, but at least we're holding inside of the new week gap to go higher if we're going to go higher. That'll be a 0-1 move back up from wherever we close off at to make our first move where we see that move come from. And then we see price trade back into this gap and hold and to go higher to get the 2-3 move higher. And then we take out last week's high. And then if we do get above last week's high, we should probably see a retracement before we push up to take out this previous day high. And you'll probably see us hold at or above inside of this daily volume imbalance. We hold inside of there or even possibly push down into this new week opening gap to get the 4 to go higher. And if that's the case, then we just still look at taking out this previous week high if we haven't, or the previous day high if we haven't got there. But this previous day high is sitting right around 5,000. That's going to be a huge number to consider. So that'll probably be where if we were to push up, we'd see price get a major response from that. So I hope that makes sense. Hope that makes sense.
Definitely, yes.
Okay.
Mhm.
Cool, cool. Let me drop gold. All right. Now let's go to VIX. So we already gapped down on ES and the rest of the indices, right? So,
Mhm.
and so that means we're probably going to get a gap to the upside. I don't know exactly where we'll gap to, but for sure we're likely going to take out this high. So this move to the upside might be done when we open up. So we will just for now, this is what the expectation is. Um, that we at least maybe get back to 20, which is right around here, right above our 5. So let's make a little adjustment and assume that we get the 20 back to 20 at least on the gap open. But once we gap through this, it'll probably settle the price on VIX again. So we'll have to just kind of watch it, right? So let's just already assume that we're going to make this move to the upside and we at least take out this high, previous day high. How far we go up, that is the question because that's all going to depend on how the market responds to indices gapping down like they did. So, and once we get this gap opening price, then we'll kind of see if it's gonna trade back into the gap, which this 5 would represent. The move from the 5 will represent price trading back into the gap, and then where and if it holds the gap, where does it hold the gap? Or if it's just trades back down right through it, right? This move to the downside is kind of already off the table, since we know we'll probably get a gap on VIX. But if we do by chance trade back below the gap, which should open up, the gap will probably be 17.48 to maybe 20. And again, this is an estimate. So if we do open up around this $20 mark, you will see that the price may trickle down into the middle of the gap, which leaves us probably right around this 1856 number. And then how it responds to that price point will kind of be like what how we trade VIX. But for now, this is the setup. I'm not going to go too much into this one because it's kind of already known to be out of place. So we actually will need to reevaluate VIX in the morning when it opens up because it's not going to be the same. It's not going to look the same on the open. Does that make sense? That
Yeah.
makes sense,
Yeah,
John?
yeah, yeah. Yep, 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 yep.
Okay. All
Mm-hmm.
right. Cool, cool, cool. And now we can go into Dow Jones. Dow Jones, our first indice. You'll notice that this didn't make an all-time high. We're close to it. The high we made was from February 10th, which is my grandmother's birthday. Rest in peace to my best friend. Um, at 59.14, right? We gap down on a new week opening gap. If we want to get higher, we're gonna have to get above the low of the new week opening gap and get above that daily price. And then if we get above that, we start to see price hold above 49,507. That's when we can kind of confirm that, hey, we're in this 0-1 move. We should be getting at or above this previous week high. And then if we do, we get a retracement, a 1-2 retracement back into the gap. And then we should see price hold to get us above the previous week high for sure if we hadn't done it already. We could see a sell-off or a retracement at the 1, but the highest probability right now is at the 3, simply because that previous week high from the weeks before is by right inside of this daily fair value gap. And so since we know when price gets into this type of area into an imbalance, we should see some kind of reaction. So that 3-4 move should happen somewhere in here. And if it does happen in here, we could go as far as the coming back to the new week opening gap. But once we get down there, there is a 4 hour fair value gap that we would kind of also have to deal with. So if we do get a 3-4 sell off, watch it inside of this range and inside of this range because we could get another move to the upside, or if we violate these and we go further, that's the main area we would kind of want to look for to see how price responds. But if we do hold, the 4-5 move takes us above this daily fair value gap and these previous week highs right here, and then we can start looking at the all-time high getting taken out. We're already in the 0-1 move to the downside, and that puts us in the at the middle of this 4 hour fair value gap. And if we do trade lower, our 0-1 would likely hold in this range from this old order block. And that's where we likely want to look for our first retracement or new move from the 1. Um, if we keep going further, our 2-3 move takes us below this low and back to the yearly opening price. Let me slide you over just a little bit. Our yearly opening price is right near where these lows are. So if we did sell off, you kind of expect them to go ahead and run these lows to get back all the liquidity that's right here by the yearly opening price, and possibly into this new week opening gap from last week. So if they were to do this 2-3 move, it would make sense for them to sweep all of the liquidity that's below these lows right here, and then trade now into this before it got to move up. So that's what I'm
You,
looking for Dow.
you marked up means after opening, right?
I did. Yeah.
Yeah,
Yeah, I did. Because it would normally have been up from here, right?
yeah. Because I have done from there, so this is little different.
Yeah, yeah.
Mm.
I did a little different because
Mhm.
I knew we were gonna get the gap to the downside. So I was
Okay,
like,
okay.
let me just go ahead and mark it
You
up
were
from
waiting
there.
for that.
Yeah. And I actually marked it up before the market opened, but
Okay.
then I was like, you know what? I know
Mm-hmm.
it's gonna gap. So right before the call, I went ahead and made some adjustments so that way we go ahead and account for that
Mm-hmm. So gap because of this news, right?
because of the news. Yep,
Mm-hmm.
exactly. Like
Mm-hmm.
I knew it was gonna be negative news, and I didn't really have a doubt in that.
Okay.
So I was just like, let me just go ahead and account for it, and I'll start doing that moving forward because sometimes we just know it's gonna gap or it's gonna do something. So
Mm-hmm.
there's no point of marking it up
Yeah,
like without considering that already.
exactly.
So so okay, here's our next thing. Here's NAS, right? And NAS has already taken the high. And because of that news, we've already gapped to the downside because of that. So we already came off the high, right? And since we already came off the high, we can already take into account for the fact that we've traded. There's some, if we look at the daily, and we're gonna take this off, right? So this would have been a fair value gap, but this all of this candle has pretty much got eaten up, right? So there's an imbalance here, there's an imbalance here, there's an imbalance here, there's an imbalance here, and there's one down here. Which does it trade back to, right? We took a high out here. This is a high probability. We took a high out here. This one's a high probability. We took a high out here, but we already traded now. So this level, it could hold, but because we kind of already ate up most of that price, it's probably gonna want to come into one of these imbalances down here below. And again, the one you want to pay attention to is the ones that take out a high, right? Because this move, like here, let's look at a couple of examples, right? Once we made this high, this was the last low, right? Then we made the fair value gap, right? The first one that it came back to right here, this high on this candle is 46343. These highs right around here, 4634, 46334, right? And this high is 43 46343. These highs are 26334. So it almost came to this high on this move. It just missed that one. Let me just double check. What's the high on that? 332. Yeah, it didn't quite get to it. But this move over here did. And it came back to it on this move. Came back to it. The high, pretty much the high of the fair value gap right here. This one didn't take it to it, but it's probably so the kind of the concept is anytime you have a fair value gap through a major low, you can expect price to come back to that at some point. It in this case, this fair value gap right here, it tried to come through it on these days. Almost same thing with this day, but it definitely came back in a couple weeks later, and then you got a major sell from there. And if this could be on the 5 minute chart, this could be on the 1 hour chart, this could be on any time frame. So just look at those things to consider. So from the looks of this, right, this little short term high right here, if we do take out this low, we're likely coming into this fair value gap. This area right here, we pretty much already came back down into it right here on the low we made. So this little small fair value gap is probably one we want to pay attention to. So if it does keep going down, this is one where we can see price trade into. Now, it doesn't have to do this, but there is a high probability that that's going to be the case, right? Does that make sense?
Because yeah, it makes sense. So like I'm expecting like to inversion from here, right? So that bullish move will return till this and change this FVG into IFVG and then go back if it want to, right?
You mean this one that I got right here?
Uh, that back one, you are doing that calculation uh, on daily.
Oh, the daily. Oh yeah, yeah, yeah. This one right here.
Yeah, so I'm expecting this as an inversion.
Yeah. Yeah. Yep. It's pretty much already done it.
Yeah. So because move has done, so means if it will come back till there, that is the good point to
Mm-hmm.
return. Right?
Mm-hmm. Mm-hmm. It's pretty much already done it.
Mm-hmm.
And with this move, the fair value gap that we made, that's pretty much confirming that it's pretty much flipped it already. Flipped this bearish one. Let's do 400. Mhm. Drag this out a little more. Okay, so again, this was this was bullish. I mean bearish, and then we traded bullish through it. And now we replaced it pretty much also with this fair value gap. So we know there's a lot of support around this level, right? So on the 0 to 1 move we're making right now, I do expect for price to get into this range. And if it does get into the range of the inverted fair value gap plus now the daily fair value gap that we got, we do have this low before this. So right, we could be taking this liquidity before, even though we probably like trade through this, take the liquidity and then trade back into it. So let's make our high probability the one, the one. And anywhere within one, we could see the move bounce back up. If we do trade below this and we cannot hold when we make the 1-2 retracement, then we sell off inside of this range and now this stays bearish. This turns back bearish for now. And then our 2-3 move takes out the low that we made here if we haven't, and the low we made here if we haven't taken it out already. And then we look for this low to get taken. This is also in the midst of that the other fair value gap that we mentioned. I'm not gonna let's put it on there. Let's put it on there instead of just not considering it. So here is the other one. This low is 75, 75. Okay, looks good. All right. So this is the other one. And again, same way, if we get our 2-3, we trade down into this fair value gap. And this fair value gap has this low just below it. So we could be trading down into it and then pushing higher from there. So that's the downside move. From the upside move, we would likely want to see price get back above and hold above the daily for our 0 to 1 move and then clear out this gap because this gap through this low that we just had right here. And because we got through this low, we took some short-term liquidity, and that could give us the what we need to get above the all-time high that we made on Friday, which took out the all-time high we made on October 30th. So if we do that, we take out this high, we go ahead and trade through this gap, same time, and we likely end up right around the 27,000 mark for our new high out
So
up
how did you took this target?
because that's the next whole number.
Whole number. Okay.
Yep, 27,000 our next whole number. And again, these are new highs, so we got to work with the new high range. So if we get above this high that we made on Friday, which was 26,883, we'll likely go to 27,000. And then after that, we likely go to 27,250 is our next area, which is right around the three. So if we do hold the 2-3 move, we take out the last high and then we head towards the next quarter point, which is 27,250 area. And then our 3-4 gives us a retracement. If we hold inside the weekly range near these highs. And then we either sell off from there or we make our new move on the 4-5 move. The 4-5 should be right around 27,500 level, at or around that level, which is would be the next quarter point.
So you took a whole number plus 250 for MNQ, right?
Yep.
Okay. Yeah, so I did that with that fib. So means approximately next is 2700, but after that, like it's 27 150. Then
Mhm.
yeah, so
If you do the
150.
fibs,
Yeah, I did that. Means
do the
I
fibs
did
too.
used with daily candle. So from there I took that.
Yeah, you can do the fibs too.
Mm-hmm.
The fibs still kind of line up with those numbers.
Yeah.
So that's why I kind of it's like here's the if I was looking for the one, we right at 27,000, you know.
Mm-hmm.
27,000 is between these the 114, 127 levels, right? If I
Mm-hmm.
put the 50%, 50% is roughly around here.
150. Yeah, 27 150.
Yeah, so we looking at pretty much I would just still if I was at 150, I would just go ahead and target 200, you know.
Okay.
Um, then or go ahead and target the 227 250 area between that 200 and
Yeah,
2750, you know.
mm-hmm.
So I would still target that.
Okay.
75 would be the 75 mark is 335, 339,
So
but
mine is 330, 316.
yeah. And if I was to target the next hole above 250, I would still probably be looking for the 500 area.
Yeah, so mine is 434.
Yeah. So, yep. So I hope that makes sense.
Yeah.
All right. So this
Yeah,
is
so this a whole number concept of I totally forgot that. So when
yep,
I saw there was no high, then immediately I put that fib and started to do that.
yep, yep. You can do fibs or just do the quarters because it's gonna kind of be close to the numbers anyway.
Yeah, exactly.
So it only kind of makes sense for you to do it that way.
Mm-hmm.
Um, and then now finally we got S&P. And on S&P, let's look at the daily real quick. You can see again, we took out all-time high that we made over here on January the 28th. We took out this high right here with this imbalance. We took out these highs with this move here right near the yearly. Even these, and again, these highs all through here were taken out by this imbalance. So you had this high, this high, this high, these highs get taken out with that move. We gapped down into this fair value gap, and then we ran higher from there. We left a little small fair value gap here, right at the yearly, through these highs right here. We had these highs over here. They got taken out by this. We had these highs over here. They got taken out by this. We had these highs right here. They got taken out by this little small one. So let's add this one. Yeah, let's add you. Okay. So that looks like it's the one we'll need to look out and consider, which is right now is just below our low of day from today. So just at the low, which makes sense.
Mm-hmm.
Okay. So we already gapped to the downside, and you can see we took out this liquidity from Friday. And if we are to continue, I would like to see us trade into this daily fair value gap, right? And we just established why just now because it took out a high when it gapped. So this is where I'm hoping we trade into. So our 0 to 1 should take us into this and possibly below these lows. If we get into this, that should be where we get a bounce from. And we could likely be getting a bounce from it now, which still accounts for a 0 to 1 move, right? We could be bouncing right now. And this 1-2 retracement, it would be a high probability to get that bounce from. If not, we fail below the new week opening gap and the daily opening price. Our 2 takes us below the low we made, which is right now is here, and we take out likely these lows for our 2-3. If we don't get the bounce from the 1, we get the bounce from the 3. You'll want to watch and see us trade back into this fair value gap to go higher from there. If we can't, we likely fail inside of this fair value gap or even near the new week opening gap to get a 4 around there. And that 4-5 move takes out the lows we made at 3. If we haven't taken out this previous day low, this low, or this swing low, or these lows right here, that'll be the target we take out with the 4-5 move. As of now, our 0-1 move back to the upside is going to need to look like it's looking right now, where we start seeing price close back above the daily / weekly opening price / new week opening gap low. And then we'll likely see price push up into the gap, and we'll probably get a swing high near the upper quadrant or the middle of the new week opening gap. And then we get a 1-2 move to the downside. Again, that could start the new move to the downside, but it may be acting as a fair value gap. I'm sorry, an order block to go higher and go through the new week opening gap to go further above the now all-time high that we made on Friday, which was 7185.75. You see, we took out the high, the all-time high we made at on January 28th of 7094.00. If we do hold and we get a order block near the midpoint, near the upper quadrant, we can get the 2-3 move above that and to go ahead and clear the new week opening gap and maybe even the all-time high. And then we get a retracement down to that on the 3-4 move to go ahead and go higher. Also, if we already taken out this high, if we haven't taken out the high, the 4-5 move would be the move that would take out that high. And just like we had this high on of 7185, the next area we look for as our main target is the 7200 level. The 7200 level, if we start getting a lot strong, even stronger price movement, and we get above the 7200, the 7225 level is the next level we look out for, which is also where I'm thinking we get a retracement at. If we do push up to make the 4-5 move, we take out the high. If we don't have the high taken out already, we get to the 7200 level and then we bounce, reject it. And then that would be like determining whether we keep going or if we make another move to the downside, you know? Does that make sense?
Yep.
We tracking. Okay,
Yeah.
cool.
Mhm.
Cool. Everything is understood.
Yeah. Mine is like little different because I have done that before and didn't consider that news. So everything target is different.
It's okay.
Yeah.
It's all right. It's all right. I
Yeah.
know what it looked like already.
Mm.
If that's a plus, I know what it
Um,
looks like. So,
uh,
um, so yeah, like I said, let's look at the calendar real quick. I don't have anything else. Any before I talk about this, anybody got any questions about this week?
like so for bar chart, right? You
Mhm.
have did you save any template kind of thing? Because whenever you open, you have always this screen, right? Mine is like it candle get changed. That is like a bar kind of thing, and there is one more indicator like volume, and this got indicator uh,
I think I took
was
it off. I don't remember.
um,
Um,
because
full.
I have seen that you are logging there. I can see that, but I am also, but I don't know.
You
Maybe
have your account set up?
yeah, I did that.
Hmm. Mm.
But you have not done any like template setting, right?
No, no. No, I haven't. And if I did, I don't remember
Oh.
because I
Yeah,
haven't
because
changed any of this.
yeah, actually, since this time you started to talk about this, so every time on Sunday, when you are telling that I am doing my setting, right? So,
Uh-huh.
and I forget about, I thought maybe I am forgetting something. So I went to back to that notes when you were doing those things and I was writing. So there was nothing set up kind of thing. So I'm not sure what I'm missing.
Not that I can remember.
Hmm.
Let me see. I'm gonna just check. I set up my watch list. I did do that. Oh, maybe. Let me see. Save chart as an image. Add to my
No,
chart.
I think this is like image kind of.
No, nothing here. Hmm. Mm, I didn't change nothing.
Mm.
Not that I can remember.
I don't know. But I think that volume chart, whenever you will open without login, I think that is the by default indicator added in this chart. So it comes always.
Oh, I do know I deleted some stuff. I do remember this when I deleted the indicators that they have on there.
Uh,
Cancel, cancel. No. Let me see. Did it?
Control Z,
Uh,
Control
uh,
Z.
okay. Oops. Dang, I'm doing everything. Taking pictures. Cut. Um, let's go chart. Yep. Let's leave this new pane, precision, steps, lines, that columns. Okay. Um, okay. All right. So hopefully, hopefully this opens up the same way.
Yeah, yeah, it is same. Okay.
Oh,
That indicator is same, right?
yeah.
Mm.
Yeah, but no, I didn't take anything or save anything. I think it's just kind of I did it this way once, and this is how it's been returning ever since. So
Okay, okay.
yeah,
No worries, I'll find something.
yeah. So now it's back like it was. I just refreshed it. So but I like I said, I did open my an account. So if you haven't opened an account, that's definitely got to be a part of it.
No,
So
I'm sign in. No,
yeah,
I know for sure.
yeah, yeah. But all right, so I'm gonna go ahead and stop the recording here. So no, no, I won't. No, I won't because this is okay. I just want to pull out the calendar just to kind of let you kind of see what my timeline looking like.
Mhm.
So we can go to month, right? So today is this is Sunday, the 19th. I'll be traveling starting tomorrow, so I won't be able to do the call on Wednesday. And the next day is the Sunday call. And the Sunday call, I'm not 100% sure where we'll be with regards to having everything set up. So I'll give you guys an update on where and if everything is set up by that time, and if not, my goal is to start back the sessions on the 29th. But if not, the worst case will be the third when we go in and have our next session. Okay?
Okay.
For sure, I can tell you for sure, the 22nd, Wednesday, no session. But what I
Mm,
will do is I will drop my charts for Sunday. For every day, I'll drop my charts. That the 22nd, the 26th, the 29th, I'll definitely drop my charts. But I just don't know if I'll hold a live session for those couple days. Okay?
yeah. Yeah.
All right, all right. And hope y'all have a good rest of April.
Mm-hmm.
Um, and good luck on the rest of the month. Get ready for the 12-week year. We're gonna go ahead and start our next 12-week year. And that's it.
Thank
Later,
you.
guys.
And
Hope y'all have a good.
so you are going to start tomorrow, right?
What's that?
You are going,
Traveling. Yep.
you're traveling tomorrow, right?
Traveling tomorrow.
Uh-huh. Happy journey.
All
At what
right.
time? At what time?
Early in the morning,
Early in
7.
the morning. Okay. All
All right,
preparation is
cuz have a
done.
good journey. Y'all,
Uh,
everybody have a good one.
Okay.
All right.
Later.
Thank you, sir.
Later. No problem.